All right. Welcome to another trade concept video. And today's video, we're going to be talking about a pretty basic idea, market structure shift. So basically, a market structure shift is a confirmation or confluence to help indicate prices, to help us view prices in a way that it's tipping its hand to us, that it's reversing. It's a reversal. It's not a pattern. It's not like, oh, I see a break in swing high. Oh, we're gonna go higher now, or it's not something that you should just take your trade off of just because you see a market structure shift. It's more of like this, you know, a building block to a trade, if that makes sense. Like you would people would take trades off of a like a retracement back down into an FEG or an order block. A market structure shift is more of a, hey, we're reacting to this PDO array. It's kind of giving more confirmation that, hey, prices are gonna go reversed in this direction. So here I have, what is a market structure shift? A market structure shift is a confirmation slash influence to help indicate prices have reversed for the time being. A market structure break is like, it's like the same thing basically, but I prefer using market structure break for like the higher time frame. Market structure shift is just, when I say like just for the time being, it's not like prices are going to continually go higher and higher and higher until the end of time. It's just for that time, for that moment of time. So, like I said here, it should not be the first reason you take a trade. Only used for extra confirmation for a already existing trade idea. So let's just say you have a trade idea. Hey, I'm gonna wait to see how prices react at this 4-hour fair value gap. I'm gonna target, previous day high. Once I see us retrace back into a 4-hour FEG and see some sort of reaction, and if we break a swing high, then hey, we're, confluences. That's just bam, that you add onto you add into that layer. You're creating that, that burger. The patty is that 4-hour FE that 4-hour FEG, and then that market structure shift could be like the lettuce to it, and then you're just adding all the components to your trade idea, and then once you hit that trade, bam, you get to taste your burger. If it is it good or is it bad, Okay. So to break it down, a market structure shift is basically when prices trades past a swing high or low after tapping into a key level. I'll show that in the next examples from here. And for extra confirmation, we should see prices close past or close above or below the swing high or low. This will help defer a market structure shift from a liquidity sweep. So I will explain that in the next slide. And my last point is that ICT states that according to a market maker model, once the last stage of accumulation gets traded past, that would indicate a market structure shift. So not every break past a swing high or swing low is going to be considered a market structure shift. After he doesn't really delve into this too much, but I did hear, and I've studied that once that last stage of accumulation gets traded past, let's say we're on the sell side, and it's a market maker's sell model. Once we break lower or trade lower past that swing low, that will be our, hey, we just market structure shift, and then we can consider that retrace back to it, blah blah blah. I'll get into it into the next slide here. So for example of a market structure shift is All right, so we have our, like I said, we shouldn't be taking market structure shift just because of, market structure shift. We want to have narrative into it. So for this trade example, prices are retracing back into this 4-hour FEG, right? And notice how prices closed here. We close above the consequent encroachment of the 4-hour FEG. And notice how this candle right here, notice how we create a really big wick. Or ask yourself this. Every time you see something, a candle like this, will we most likely take out this 4-hour candle high or 4-hour candle low? We can anticipate for the next 4-hour candle to take out this previous 4-hour high right here. So that is my trade idea. That's the that foundation of my trade idea. Now, when I say that market structure shift, a market structure shift is just like, an addition to an already existing trade idea. This is what I mean. So we're on the 4-hour time frame right now. We want to go onto the lower time frames to have, extra confluences. So we go on to the 5-minute time frame. So when I say market structure shift, this will be a market structure shift right here. Right there. That swing high is our market structure shift. That black line that I have marked out is our market structure shift. And going back to our last point, ICT, when I say that, ICT states that according to a market maker model, once the last stage of accumulation gets traded past, that would indicate a market structure shift. Usually the last stage of accumulation is a retracement into a fair value gap. So prices is dipping lower. We tap into a new day opening gap. We're retracing lower. And keep in mind, we are retracing inside a 4-hour fair value gap, right? So we trade lower into this 4-hour fair value gap right here. And this is on the 5 time frame. So we're retracing, or I'm sorry, we're going into the 4-hour fair value gap. We trade lower and then we retrace. We retrace into a 5-minute SIBI. We retrace into that 5-minute SIBI and we continue lower from that, right? That after we trade once we trade past above this swing, that black line right there, that swing high, that would be our market structure shift. This even could be our first initial market structure shift right here. This could be our very first market structure shift. If you want to get into the nitty gritty. So like I said here, it's all a market. You must see it like a market maker's buy model here. So you can say this is the original consolidation, whatever. When prices trade into this fair value gap right here, that 5-minute FEG that I didn't note out, once we trade back into that, once we retrace back into that, that would be considered the last stage of accumulation. So this is on the sell model here. We're on the sell model, or sell side. Sorry, we're on the sell side. We retrace back into the first SIBI, first stage accumulation. We retrace back into that, and then we dip low. We trade lower, and then we have another retracement into another 5-minute SIBI. So this would be our second stage accumulation. Once we break past that second stage accumulation on the buy side of the curve, we trade past the first stage and the second stage accumulation on the distribution side, basically the buy side. So once we trade above that, that would be considered our market structure shift. And notice how we close above the swing highs here, the first swing high and the second swing high. We close above it. That's indicating, hey, we're not just sweeping these highs here. We're actually going to go higher, to continue higher, to look for higher liquidity, for looking for more buy side. And because this trade had displacement away, displacement is just basically like fair value gaps. So in like, just to break it down here, for like simple terms here, for a drawing, so accumulation, right? This is the original consolidation. We break out of the consolidation, right? We retest the original consolidation. That could be considered the first stage accumulation, and then we break, continue lower, and then we retrace once the last retracement. We continue lower. Once we break past this swing high here like this with displacement, then we can target. So we just add some lipstick to this. Consolidation. This would be our first stage accumulation here. This would be the second stage. And let's just say that we retrace back into an FEG here. Oops. Alright, so this is the last stage, or second stage. Second stage accumulation. And let's just say that we're coming into like some sort of like a 4-hour FEG, and this is the 5-minute time frame. So this is the 4-hour FEG. So we original consolidation, retest the original consolidation. We break lower. We retrace once again into a 5-minute FEG. Once we trade past this second stage accumulation, that would be our market structure shift. Sometimes on the lower time frames, we might see some swing highs like this, and then we get trade past it, but we continue to go lower. The second stage accumulation usually is a retracement back into a FEG. That will narrow out, or that will narrow the list of every single market structure shift that you see into a smaller pool. So not every break past the swing high will be considered market structure shift, but once you apply that rule of, hey, my market structure shift has to be a retracement into some sort of fair value gap. Once we break past that fair value gap, that swing high that got retraced back into a fair value gap like this one. So once we trade higher from this swing high right here, once we trade past it and we close above it, then that would be, for me, hey, that's our market structure shift. Because I don't want prices just to stall here, keep retracing, we wake above it and we continue lower. I want to see a closure above it, and one of the things I also want to see is displacement away too. So that's basically what this right here is. Market maker buy model, and you can see prices in this occurs all the time on every single time frame. It's just it happens more on the lower time frames, because in lower time frames we have more models to trade off of. Higher time frames it requires more time for a trade idea to plan out. But basically, the key takeaway from this video is not every market structure shift is a market structure shift. Having your rule set, hey, my market structure shift has to be a retracement on the sell side of the curve to be like a retracement back into a fair value gap of some sort, and that we must close above this swing high right here. Like we must close above this swing high. So let's just say prices close above this swing high. I don't want to see a liquidity sweep. You know, I don't want to be the liquidity. So that's it. Like that's the two tips I would give you guys for, you know, considering what a market structure shift is and when to look for one. And yeah, basically that's kind of basically all I have for you guys on market structure shifts. Let me know if there is any more questions over it, but yeah, that's basically all I have for a market structure shift, and I'll see you guys later.